Okay, good afternoon, guys. It is 1:31 on Tuesday, the 16th of April 2024, and that brings us to our second year and 2 weeks into this theoretical financial independence, retire early journey. As you would know if you watch the channel, this is going to be roughly an 8-year fire journey, basically an experiment to see what happens if we were to consistently invest £120 a week into the S&P 500 exchange traded fund. The one I'm using here is provided by Vanguard. But you could use others. It's just simply that Vanguard is one of the ones that has the lowest fees historically. And of course, the S&P 500 has historically provided a better than 10% return on average per year when looked at over a 20 or 30 year period. That discovery, if you like, was made by a retired, well, he's now retired. I think at the time he was working as a financial advisor, a chap by the name of William Bengen. And if you look him up, you'll find quite a bit from Bill. I've included a couple of interviews that he's done, notably with Paula Pant from the Afford Anything podcast, among others. And I've included that in the financial education playlist that you can find on the main channel there. So let's have a little look to see where we are today. As you can see, currently the market is open. Today we're down not quite 1.5%. Actually, that's just jumped back a bit. 1.33% there at present. Now the portfolio value had been just below 15,000 because of that pullback. It has literally just popped over it. So it's kind of fluctuating. The past couple of weeks, we've, I think was it 2 weeks ago, we saw the portfolio jump just over the 15,000 when I had put in that week's investment. And then last week it had pulled back. It was sitting just below 15,000. But of course, that week's investment pushed it just over it. And this week we are back down again, actually just hovering around the 15,000 in portfolio value. So the current live, if you like, return on investment is just below 18%. Current average price £65.42. That's the basically sort of like a dollar cost average price, if you like. But of course, now that we've got 15,000 invested, when we invest a further £120, it makes very little difference in terms of actual ability to influence the average price. But nevertheless, it will shift it slightly upwards probably. So if you remember 65.4231. Try and remember that figure. I'll try and remember to come back to it before I've finished, just to see how much it has shifted. Current market price 77.14.5. So as I say, for the day down 1.3%, for the week down 1/3%, and compared to this time a month ago, we are still sitting roughly 1.5% in the green. And the other figures you can see there also. So just looking at things in general, I mean, let's take this back. I'm not sure, I assume you can still see the COVID effect. Yes, you can. So basically, the market was rumbling along as usual up until COVID hit, or at least lockdowns were announced, or something like that. Then the market took a bit of a shoot, and then gradually recovered actually pretty quickly afterwards. And in fact, by the end of the summer 2020, the market was back to where it had been pre-COVID, albeit not every sector had recovered. I suppose you could say there were certain aspects of normal daily life, like travel and tourism, which would have taken a lot longer to recover because of the way they were hit. And then there were other companies, other sectors which thrived, or at least should have thrived during COVID, including the likes of companies like Peloton, other companies that maybe had to do with sports or online activities. Zoom, I think, probably didn't do too badly during COVID. But yeah, so as you can see, you've got this kind of normal market fluctuation, up a bit, down a bit, up a bit, down a bit, generally trending upwards. And then there was a period of stagnation, which is basically this bit here. A bit of a stagnation from, let's say, the end of 2021 through to, I'm going to say, June last year. And then the market broke away. And so actually it's been going on a fairly steeply upward curve for the best part of 10 months, roughly. And it hasn't quite reached where I think the trend line should be, which obviously, as you know, is this line here if you've been watching. So there's still quite a bit of a gap here between where I think fair market value should be and based on the trend up until a couple of years ago, and where we are actually at present. Of course, various things have had an impact, not least of which the conflict in the Ukraine. And I wouldn't be at all surprised if the current Middle East conflict, as well as the suggestion of Iran beginning to target Israel, that is probably all creating a little bit of instability, a little bit of uncertainty in the market. That might be what we're seeing today. I'm not too sure. But anyway, irrespective, we will do as we always do. And we will go ahead and buy the normal weekly £120 worth of stock in the market. While that's loading, let me just remind you that there is a free shares offer available in the description for the video. Now, whereas the week before I think there was only 5 days remaining, currently there are 13 days remaining. So I am making a bit of an assumption, but I don't know. I'm making an assumption that the free shares offer was renewed. I'm not sure if it was renewed for a further 2 weeks. That might sound sensible because, as I say, 13 days remaining. So if it started yesterday, that would be 2 weeks. But anyway, with that said, guys, we are putting in £120, which is going to buy us slightly more than last week, 1.55 shares, thereabouts at current market value. And let's put that through and see if that's what we get. So top right hand corner, so 65. Okay, so I was just actually looking at the average price there as well, just as I did that. It has jumped up a little bit, so the average price now is 65,5162. I forget what it was before, but if you were to rewind, you could find out. I'm going to presume it was 65 or something, but I genuinely don't recall. I think we did see an execution there. Let's have a look-see. So yeah, we got 1.555 shares at 77.16 and a quarter. And just a quick mention of the other, the other notifications here. Tesla down 4.5% on plans to slash 10% of its global workforce. That was news from yesterday evening. I am not at all surprised by that, and quite frankly, I personally don't view EVs as a good investment. I've just heard too many reports of whether they were going on fire spontaneously, perhaps whenever the battery is not maintained properly. I'm not too sure, but either way, it appears as though that's a real risk for EV batteries at the current time, and until such times as that is resolved to the satisfaction of insurers, I just do not see EVs as a viable alternative, and that's without even talking about the issues surrounding range and everything else whenever you actually turn on anything electrical inside the cab. Apart from that, biggest stocks before earnings: Johnson & Johnson, Bank of America, United Health, Morgan Stanley, and Ericsson. Then we have high volatility: Goldman Sachs up 5.5% on first quarter profit beat, driven by investment banking recovery. So that's the notifications. I'm trying to remember. I have a feeling in my head that there's something. Yes, I did mention the free shares offer. I didn't mention that I would strongly discourage anyone from taking up the free shares offer unless it is something that you have looked into and you have already made the decision that you are going to get into the market, and that is what you want to do. And the reason that I would discourage people is that investing is not for everyone. You really need to have some kind of an understanding of what you're doing, why you're doing it, what you hope to achieve, and I suppose what your risk tolerance is as well. Because there would be nothing worse than going into the market, investing perhaps more money than you could afford to leave in the market for a length of time, seeing it halve, and then having to go ahead and sell up at a massive loss, which is not an unrealistic possibility. That can happen. It has happened to other people in the past, and really, if that's the sort of thing that you could end up doing, then quite frankly, I would much rather you not bother. On the other hand, if you have done your research, if you understand a little bit about investing, if you're sure that what you want to do is get into the market, for example, with something like the S&P 500, and also that your intent is to stay in the market for, I would say, a number of years, to allow the investment to develop, then I would say yes, by all means, go ahead. Take up the free shares offer, which is linked in the description, and we could both get up to £100 worth of free stock. And guys, with that warning issued, I would like to thank you for watching today. Just before I throw up the end image, as I call it, I just wanted to point out that yes, the figures on the right here have updated after that most recent investment, and we are currently now sitting with a portfolio value of 15,135. I think the stats have improved very slightly more than they had as well, and that has helped this to look a little bit better than it did before. But as you can see, we're still kind of pretty close to the bottom of the red candle there. So this is normal market volatility. We should expect to see falls as well as rises. That's all part of it. And it's as I say, it's to be expected. It's part of it. It is normal. We haven't seen much of it for a while, but that is the way it goes. We still remain in green territory, and that's a good thing. And hopefully things will not fall too far before they pick up and start to go the other direction again soon. Just one little stat to finish on, and I forget who it was, but it probably could have been J.L. Collins, who pointed out that the S&P 500 on average goes up 3 days out of 4. And I remember thinking that was a very nice little statistic, perhaps a little bit simplistic as well, because it's all well and good saying it goes up 3 days out of 4, but if you were talking about growth of 0.25% for 3 days and then a fall of 1.5% on the fourth, obviously that's not what you want to see on a regular basis, but there you go. Guys, thank you for watching today. It has been an absolute pleasure, and I'm pleased to see that there has actually been a little bit of progress in the audience figures for the channel. I have no doubt at all that is mostly down to the use of AI to create a couple of informative little videos, which I have also included in the financial education playlist, which you can find on the channel. But yeah, no doubt about it. I'm sure that's where the growth has come from. But either way, I'm happy to see it. I don't feel that there's enough taught in schools about financial education, never mind financial independence, and that's I suppose in a way that's something that I would like to see change in the future. So as I say, thanks for watching today. If you're interested in following the journey, please consider subscribing to the channel, and if you particularly liked today's video, please give it a thumbs up. And of course, any questions, comments, or indeed criticism, fire into the comments box below. Thanks for watching, guys. I will be back again next week with more. Bye for now.